Hi everyone, so I'm up 24.97% on the account, and I have a new position on crude oil. It's short puts, and I want to explain why I opened it. I think it's pretty interesting. So here's my stats for the entire year before that. I think the S&P is up about 12%. I'm up about, it's actually a bit more because this is the number as of yesterday, and the position is doing much better today than yesterday, but it is what it is. My current margin requirements are 16% of the account, so this is the only position. And you can see everything else, all the other positions I had throughout this year so far. And currently, this is the position. It's crude oil, short puts at 52 with 99 days to expiration. Opened just a few days ago, September 8th. Currently, it's about 20% of credit. Now, why did I open this position? Few reasons. So I opened it just at the beginning of the day, right here when the price was right about here, and I opened it because there are a lot of geopolitical news, and here actually just right now we have a bit more news about Ukraine tracking Russian oil refineries, or not refineries, sorry, but we also have the UK announced new sanctions on Russia. So obviously I did not know all these things would happen. I think also Israel attacked in Qatar. Obviously I had no idea these things are going to happen, but at the same time there were a lot of news about things are heating up with Russia, Ukraine, in the Middle East, so on and so forth, and Trump is pushing everyone to put more sanctions on Russia or Russian oil one way or another. Right, so you can see how there's a lot of potential upside, or there's a lot of potential volatility to the upside. It might obviously not materialize, but there is a lot of potential. So I don't want to be exposed on the top side. So, and as we know, commodities and specifically like crude oil specifically crashes upwards. So if that we have some bad news, some conflicts are escalating, price will go up. And another reason is because we almost certainly will have an interest rate cut next week, and because interest rates are pretty bullish for crude oil, so I also expect price to go up. At the same time, a lot of the supply and demand does indicate that we have more supply than demand, so price kind of should go down. But again, at the same time, this is why I chose a 52 put strike. So this is really far out of the money. And my defense for this position is if we are down 100% of credit, then I'm going to roll out in time and down even more, depending on the news again. But it's really unlikely for the price to go down to 52 within the expiration. And see here, the last time the price was around that level is in May of 2021. So quite a few years ago, right? So this is why I kind of made a decision. It's a smaller position than I usually open. I've collected about 4% in credit on this position. I'm taking profits at 50%. So let me show you. I think I should have it right here. So there we go. And yeah, we had 99 days to expiration, taking profits at 50% of credit, and I will roll or close the position at 100% loss. And it depends on the news, depending on what news drive it down. But you can see how there's very little chance for the price to keep just kind of crashing down. It can happen, of course, anything can happen. But the point is here, this is the same thing as selling calls on the S&P, right? You know the S&P is not going to crash upwards. It can go up pretty quickly, but it's not going to crash upwards. The same way the S&P is crashing downwards, right? Same thing over here. The price is not going to crash upwards. Or crash downwards. It will crash upwards first, and then obviously after the upwards it can go downwards as well. But this is kind of like how I view things and how I position myself in this position, and why I entered it. And if you want to trade with me, just please email me with my email address below. I don't sell courses. I don't do any of this crap. I offer pretty much anything out there. All the information is out there for free for the most part. I think I'm going to be writing a book as well. Again, it's going to be completely for free. I'm doing pretty well for myself. I don't see a reason to charge for a course, and And at the same time, it's just information that's already out there. The big thing here is experience. So experience is what kind of differentiates the best from the good and from the bad. Right, so if you're interested in trading with me, kind of following my trades, shadowing me, learning, let me know. It's all performance based, so there's no like monthly fee or whatever. There's no risk basically for to try that out. I do have only like an X amount of people I can work with because it is time intensive. It's one-on-one work, but I think it's pretty good value for everyone, and I do feel pretty satisfied with with talking about this subject and just explaining and making sure there's more good traders out there in the futures options space. So thank you again. If you have any questions, let me know. And that's it. I think you guys should have a good weekend, and I will catch you in the next one.